Good morning. This is all you need to know. I am Agam Akil. Let's start by taking a look at the global markets. At this point in time, we do have mixed cues coming in from the US. However, we have the Dow Jones, the S&P 500 and the Nasdaq declining to a certain extent, but it's positive cues coming in from Europe. As you can see, all the major indices did close the day in the green. Mixed cues when it comes to the Asian markets, where we continue to see Nikkei trending higher in the green. We are looking at a little bit of weakness in Hang Seng as well as CSI 300. SGX Nifty at this point in time indicating a 21-point up move. Can we expect to see that play out on the opening? Let's wait and watch. But when it comes to the Nifty yesterday, well, largely range-bound move. The mid-cap and the small-cap indices outperforming the broader markets. There's mixed cues coming in from the Nifty banking indices too, with the Nifty PSU banking index taking a cut around 1.9%. We have two other sectors which were also showing weakness, namely FMCG and IT both declining in trade. And let's move on and talk about other variables. We do have ADR, where Vedanta up as much as 3.4%, and marginal gains for the other stocks. On the losing end, we do have some weakness in Wipro and Infosys and Tata Motors declining by around 1.8%. When it comes to institutional flows, FIIs will remove another 810 crores on a net basis. On the other hand, DI has plowed in another 1,555 odd crores. And coming down to the contributors, it was essentially a tug of war where the likes of ITC, TCS and SBI kept the indices down. What was working in Nifty's favor was Reliance Industries, HDFC Bank and Vedanta among the heavier weights. But when it comes to the futures and options space, we're starting to see a little bit of a pickup when it comes to the rollovers. Nifty rollers standing at around 43%. Well, just a notch below the previous 3-month averages. The same for the Nifty banking rollovers at around 36%. When it comes to your open interest distribution, is still within 11,000 put and well 11,200 call. That's a 200-point range where we're expecting the Nifty to close within, at least as far as today's concerned, today's expiries goes. The most active options yesterday were 11,200 and 11,100, where we did see a little more writing around those calls. But when it comes to the India Volatility Index, that moved up around 2.4% at around 17. And we did see the Nifty put call ratio edge up, well, or rather remain largely around the same levels at around 1.09. It was the same for the Nifty banking put call ratio at around 0.74. And moving on, talking about stocks, we did have Jet Airways and Punjab National Bank, which moved into the F&O ban. DHFL moved out of the F&O ban. Among other stocks that I want to keep an eye on is Tata Motors, which did see fresh shorts building in. We were also keeping an eye on something like an ITC, which also saw some weakness come through. And finally, a stock which actually did well was Titan Companies, bucking the trend, short covering coming through even as the underlying advanced by as much as 2.2%. But now let's go across to Paul Allen for the top international headlines.
Supreme Court nominee Brett Kavanaugh has been accused of the most lurid sexual misconduct yet, as Senate Republicans press ahead with plans to hold a hearing on Thursday. A new accuser says he was part of efforts during high school to get girls intoxicated so the boys could have sex with them. Kavanaugh rejected the latest claim as ridiculous and from the Twilight Zone. China denies it's attempting to interfere in the midterm elections, dismissing claims as nonsense. President Trump made the assertion at the UN Security Council after Beijing placed an ad in an Iowa newspaper attacking his trade war. The ad called the standoff the fruit of a president's folly. However, Trump's claim that China's been trying to meddle in the upcoming elections was rejected out of hand.
China has always followed the principle of non-interference in other countries' domestic affairs. This is a tradition of Chinese foreign policy, and our observance of this has received acclaim from the international community. We do not and will not interfere in any countries in domestic affairs, and we refuse to accept any unwarranted accusations.
The new Argentinian central bank president says he's happy with the peso at its current level and he won't intervene in a range of 34 to 44 to the dollar. Guido Sandelleris also says Argentina needs strong control over money in the economy and policymakers will take the necessary steps to ensure the monetary base does not grow. Sandelleris replaced Luis Caputo after Argentina agreed to a new credit line with the IMF. The recent rout in the rupee has prompted India to raise customs duty on a range of products from jet fuel to footwear to support the currency and narrow its current account deficit. Imports of the goods were valued at $12 billion in the financial year through to March. A 5-year high in the current account deficit is a key weakness and one reason why the rupee has been the worst hit currency in Asia. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
In justifying this, they said the economy is strong, the labor market is strong, and inflation is near target. Let's look at the dots, because that's the signal, not only that, okay, we've done the third rate hike with the September hike. Dots go on your Bloomberg shows you that now this dot plot, as we call it, this was 8, now it's up to 12 of 16 are looking for 4 rate hikes this year. They did drop the word accommodative from their policy statement as they were describing the stance of policy. Bonds did rally because they assume if the Fed dropped that stance, they might be more aggressive with rate hikes. But Jay Powell said, we just don't need it any longer. It doesn't make sense. The Fed can raise rates or lower them more quickly, more slowly. It's going to depend on the economy. Now, of course, he did say there's a rising chorus of complaints about trade and tariffs that could ultimately affect the economy. Stepping back from all this, people say the Fed has a tricky task now. They've got to engineer a soft landing, get to normal policy, and not cause a recession. That's the big challenge now.
We are doing great as a country. Unfortunately, they just raised interest rates a little bit because we are doing so well. I'm not happy about that because I know it's going to be a question. I am not happy about that. I'd rather pay down debt or do other things, create more jobs. So I'm worried about the fact that they seem to like raising interest rates. We can do other things with the money. And but they raised them, and they're raising them because we're doing so well. You know, we're doing much better than I had projected in terms of when I was campaigning. I said we were going to do this, and we're doing much better than anybody ever thought possible. And I will say, if others got in, it would have been just the opposite, because they were going to put restrictions on, they were going to put regulations on. They were going to choke the economy as it was already choking, but it would have been worse. And they were going to raise your taxes. That's what they want to do now if they ever got control, which I don't think they'll have control for a long time.
Each time my colleagues and I meet, we face the same question. How can we set policy to best support job growth and low, steady inflation? For many years, this question called for very low interest rates to help an economy that had been damaged by the deep financial crisis that gripped the world 10 years ago. As the economy has steadily gained strength, the Fed has been gradually returning interest rates closer to levels that are normal in a healthy economy. We took another step on that path today with a quarter-point increase in short-term interest rates. These rates remain low, and my colleagues and I believe that this gradual return to normal is helping to sustain this strong economy for the longer-run benefit of all Americans. As I mentioned, 10 years have now passed since the depths of the financial crisis, a painful part of our history that cost many Americans their jobs, their homes, and for some, their hopes and dreams. In addition to holding interest rates low to support the recovery, we have also taken many steps to make the financial system safer. In particular, we're holding the largest banks to much higher standards in the amount of capital and liquidity they hold and in the ways they assess and manage the risks they take. I'm confident that the system today is stronger and in a far better position to support the financial needs of households and businesses through good times and bad.
Well, stock of the day today is TD Power System on back of that buyback announcement which has come through on the exchanges previously. Board meeting held yesterday decided that the company has approved a buyback worth around 30-odd crore. The company would be buying back 11.7 lakh shares from the open market, which indicates an equity capital of around 3.53% of the existing lot. TD share buyback price set has been at a maximum price of 256 per share, which indicates a premium of more than 80% at the given maximum price. The company can buy back more amount of equity capital in terms of if this price is further reduced to around 200 to 250 per share kind of level. But do bear in mind, this again will be at a premium. Now, the stock notably in the 1 week has run up a good 22% in this week itself. If you look at the shareholding pattern post and pre-buyback, promoter obviously are not entering into the buyback, so that capital will increase from 54 to 56, and public shareholding will be reduced from 45.8% to 43.8%. If you look at the balance sheet position of the company does have some kind of debt, but then that's again a short-term debt. In terms of cash and cash equivalents, it's around 52 odd crore as of 2018. The bank balance is around 15 odd crore, and the short-term debt is around 69 crore for this company.
Shifting focus to currency and commodities market, talking about Indian rupee first, it snapped its 2-day losing streak yesterday and ended marginally higher at 72.62 levels against the dollar. Now, some weakness in dollar overseas largely supported market sentiments, while rising crude oil prices largely weighed on the local unit. Speaking of sovereign bonds, they too gained yesterday after declining for 3 straight sessions, as we have seen 10-year benchmark bond yield dropping nearly 5 basis point to end at 1 week high of 8.07%. Traders do await the release of borrowings calendar for the second half of this fiscal year. Later this week, traders do believe that a positive outcome will support the bond market. However, higher borrowing will largely dampen the market sentiments, particularly for bond market. On the global front, dollar edged higher yesterday and it now trades near 94.25 levels after the Federal Reserve raised interest rates for the third time this year. Now, this was in line with expectations. They have also signaled to drop accommodative policy stance going ahead. In the statement released yesterday, Fed signaled a rate hike in December, 3 hikes in next year, while 1 hike in 2020. That apart, if you see euro and pound, both the currencies ended lower yesterday versus the dollar. However, they are now trading marginally in the green in the early Asian hours. Well, lastly, talking about Indian rupee, now it is trading flat in the non-deliverable forward market, which indicates a flat opening for Indian rupee in today's trade. Having said that, let's shift focus to commodity space. Good morning, Jayesh. What cues are you picking up?
Morning, Saloni. We're actually seeing a rebound in the crude oil prices that have surged nearly 1% this morning, especially after Rick Perry comments saying that the U.S. market's strategic crude oil reserves will not be used for global supplies. But on the other hand, the domestic crude oil inventory, in fact, rose as much as 1.85 million barrels as reported by the EIA, and also that the U.S. crude oil market production has now surpassed 11 million barrels a day. But shifting focus to the base metal space, the index itself fell for the third straight session. All of the base metals except for zinc, in fact, declined in trade. Zinc posted its 6th increase in the past 7 sessions, while we had copper, which declined for a 3rd straight day as well. Now, this is largely on the back of concerns over the outlook for the Chinese demand, and we had other base metals like nickel and lead, which declined 1% each. And the same impact can be seen on the Shanghai Futures Exchange, where most of these base metals are in fact trading lower, with the exception of steel, which is higher by about 0.5% or so. As far as gold prices are concerned, we're seeing that gold has been stuck near the 1200 mark for the last 1.5 months, and there has not been much movement for that one.
Well, amongst the stocks you should track and trade today is HCL Technologies, which has signed a 5-year infrastructure deal with Anglo American. That apart, you also have SBI, which has approved selling 4% of its stake in SBI General Insurance for about 482 crores, and this has been sold to 2 funds. One of them is Axis New Opportunities Fund and then Azim Premji owned PI Opportunities Fund. This has valued SBI General Insurance at about 12,000 crores. So that's one stock to watch out for. You have Hero MotoCorp, which has said they will hike the ex-showroom prices of its motorcycles and scooters from 3rd of October, largely on the back of rising commodity costs and rupee depreciation. We're also watching out for Torrent Power. This is on the back of an order win, 115 megawatt wind power project. You also have ILNFS Transportation, which will be in focus, or rather which will continue to remain in focus. And this is on the back of a ET report, which says that Italy's Atlantia may buy ILNFS their road assets for $1.2 billion. The report also adds that the deal could remove about 25,000 crore worth of debt from ILNFS Transportation's books. So that's a stock to watch out for. Two interesting bulk deals as well. One is Dewan Housing Finance, where BNP Paribas picked up 1.64% stake. And on the other hand, you have Astra Microwave Products, where you have HDFC Mutual Fund sold a sizable 4% stake. So those are some of the stocks that you should watch out for.
The government has increased import duty on 19 non-essential items, which range from air conditioners, washing machines to refrigerators. These import duty on these three items has been doubled from 10% currently to 20%. These rate increase, the import duty hike comes into effect from September 27, and this is one of the measures that the government had announced, that the government would increase import duty on non-essential imports to bridge the widening current account deficit. Now, other items on which import duty has been hiked is footwear, on which import duty has been increased to 25% from 20%, and radial car tires, on which import duty has been hiked to 15% from 10%. Another important item on which import duty has been imposed is aviation turbine fuel, on which import duty of 5% has been imposed from nil, and this is going to impact aviation companies which are already under duress.
Coming back to markets and the stocks that likely react based on the market action yesterday and the delivery buying and selling as of yesterday. The first stock on the list is KPI Technologies, which was down about 7.5% in trade and saw delivery selling of nearly 81 crores. The delivery volume surged about 120% as the total volume surged more than 3 times when compared to its 5-day average. Second stock to watch out for, Excite. Now that was up about 6.3% and saw delivery value of about 57 crores. The delivery volume more than doubled for itself as the total volume surged about 77% as compared to its 5-day average. Last and final stock on the list is BEL, which was up about 10.5% and saw delivery buying of nearly 100 crores. The delivery volume more than doubled for itself as the total volume surged nearly 3 times when compared to its 5-day average.
On the big brokerage calls for the day, first we have is Goldman Sachs on Asian Paints. Now the brokerage has upgraded the stock to buy rating from neutral and has also hiked the target price to 1,550, which suggests a potential upside of nearly 21%. Now the brokerage has upgraded the stock on the back of 4 reasons. First, it believes that the capacity expansion from FY19 onwards will offer a significant competitive advantage to Asian Paints and will also improve its return ratios as major capital expenditure related to the company is now done. Now the company's dominant position in the paint industry will help better navigate a more turbulent input cost environment, says the brokerage. Also, the government initiatives and optionality of other home improvement categories are also added positive when it comes to Asian Paints, says the brokerage. Second, we have is HSBC on SpiceJet. Now the brokerage has maintained its hold rating on the stock but has cut down the target price to 70 rupees from 100 rupees. Now according to the brokerage, Indian aviation sector is set to deliver a poor second quarter of financial year 2019 on the back of higher fuel prices and weaker rupee. In fact, the brokerage is also expecting that next quarter, that is the third quarter of financial year 2019, to be also weak for airline companies and is expecting a positive momentum in the stock price only after December, as the high fuel prices will start building into the base quarter. Lastly, it also says that the newly started Fed business of SpiceJet has a neutral impact on the profitability of the company, as the scale of this business is very low as of now.
everyone wants to spend more money on experiences than goods and products. Oyo Townhouse has a single biggest ambition of making sure if you have 5 devices, you can charge all of them parallelly. Very millennial, you see. You have a study table, but most important of all, you have the standard Oyo pegs. The Oyo pegs always are wrought iron, which ensures that they are sturdy and can go for the very long term.
Well, there's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. There are also several stories that you should consider reading on the website bloombergquint.com. Here are just a couple of them. In corporate news, Jet Airways has told its pilots, aircraft maintenance engineers and senior management team that part of their August salaries will be paid by the 9th of October. And Garden Reach Shipbuilders and Engineers IPO, which aimed to raise around 345 crore rupees from the primary market, was subscribed only 0.67 times on the third and final day of bidding on Wednesday, according to a filing with the National Stock Exchange. This has prompted bankers to extend the subscription period by 3 working days till the 1st of October. Well, that's all we have for you on this edition of All You Need to Know, but there's lots to talk about, a lot of analysis of the Fed rate decision and everything to do with markets going to trade today. So do stay tuned. Up next is Indian Open. This is Bloomberg Quint.